Hello. Welcome to Al Stock Trades. Okay, guys. So in this video, we're going to go ahead and do something quite different. So first off, let me talk a little bit about Clover here. So, guys, it is insane, right? We have had a very, very bad market for Clover this year. But again, here's the thing. It's not isolated to Clover. We've talked about this a lot. Look at Alignment Healthcare, United Healthcare, Humana. A lot of the healthcare stocks are not doing well. And on top of it, last week, majority of stocks are doing terrible. Why? Because a lot of people are saying maybe the Federal Reserve might hike. Now we have this, Israel and Iran conflict that hopefully doesn't escalate due to Iran's retaliatory strike on due to the attack on the embassy in Syria. So there's a lot going on right now, and the issue is I'm watching Middle Eastern activity. I'm seeing a lot of people trying to jump on the commodity swings, fill up on gas. So I think commodities might increase, and it's going to potentially be a problem, right? So hopefully this doesn't cause inflation to go higher, especially extending beyond the core CPI. But Clover's performance this year has not been great, right? And I was hoping for better performance, but when the small caps stocks drop due to an increase in discount rate because of an increase in interest rate, unfortunately, this is the result. Now, again, I'm nibbling at these prices, but what I wanted to do is I wanted to release our portfolio hedging modeling system, one of our stock picks that is 18-year back tested. Now, this is only available for lifetime access members and stock terminal members, but given this terrible performance this year, I wanted to share it with you. Given that the market has dropped recently, as we're only 4 months in, this might be a great time to nibble on these. So for people that don't know what this is, on January 2nd, also January 1st, but let's say, January 2nd at 12:10 p.m., the start of the year, the start of 2024, I released these 14 stocks here that are anywhere between Visa, Intuit, Chipotle, Wingstop, and overall, I went ahead and released them, and I put the target price when I added them, $258. And you could go ahead and back check this on the 2nd the 2nd of January. Is a typo here. 2nd of January, not the 1st. And you can see the prices added on, right? And then let me go ahead and boom. Okay, so I went ahead and added the price on here, and then I went ahead and updated them through an automatic software that updates the stock price. So let's see how it performed thus far. So I've been keeping them up to date on our stock terminal, but if we go all the way down to the most up to date, which is today, remember how I said price when added was 258 and now it's 275. So I went ahead and added them, and overall, our stocks are up 14% this year versus the S&P 500, which is up 8%. So we're outperforming the S&P 500. And these are the stocks. So it's going to be Visa, Intuit, FI, there's a nice healthcare stock here, Chipotle, Copart, so a Wingstop. So what I'm going to do is I'm going to tell you guys why I picked these stocks and why have they performed really well. Like we're talking 7%, 3%, 13%, 17%, 13%, 17%, 15%. This one didn't do well, -5%, 15, 46% for Wingstop, 53% for Comfort Systems, -13%, and then 10, and then -11. Altogether, you add things up, it goes to 14%. So yeah, definitely take a look at these stocks. Now, why did I pick them? Okay, so let's go ahead. So this, if we can, let's see if we can go here and then make this a little bigger so I can look at the title. So this is Intuit, right? So let's go and just kind of look at all these, okay? So if you look at the revenue of Intuit went from 4 billion to 15 billion over the 10 years, right? We have gross margins increasing, right? And we have operating margins improving, net income is going up, earnings per share going up, dividends increasing, payout ratio is actually went from a high end to the low end, which is what you need. Shares pretty much stable, book value going up to $60. Operating cash flow is doing good, and the beautiful part of free cash flow is increasing. And so everything looks good in this company. And if you go ahead and look at Intuit, we picked it and we called it out at $600. Now it's up 3%, right? Again, definite long-term hold, okay? So FI, look at the revenue. Revenue went from 5 billion down up to 19 billion. Again, gross margins increased by more than 10%. Operating income's going up. So someone asked what's going on with Clover. So Humana is going down. Humana is going down. United Healthcare is going down. A lot of healthcare stocks are going down because the increase in medical cost ratio, which ultimately basically is affecting Clover. Clover is a small cap. They're not profitable right now. There is basically a resurgence technically on the CPI front, which is causing a lot of stocks that are unprofitable to go down due to the increase in discount rate, which is equivalent to an increase in interest rate through a prolongation of interest rate hikes for the Federal Reserve. That answers the question there. Okay. So I do not believe Clover Health is a scam. That is not correct. Right. So let me just go ahead and I'm going to remove this. I'm not I'm done dealing with trolls. It's really getting annoying. But overall, as I responded to people, Clover Health is not a scam. It's $1 billion generating company. And they're about to become EBITDA profitable. It's just the market dynamics. First, they went through COVID, then they went through high interest rates, and now the whole healthcare company is basically getting destroyed because of increased medical care cost ratios, which is affecting Humana and United Healthcare, but it's not affecting Alignment Healthcare and Clover Health because they're seeing a decrease in MCRs, more specifically Clover with its industry-leading MCR. The only thing is, if the United Healthcare's the big dogs go down, Clover goes down. That's just how it is because it is unprofitable, right? So I believe that there is a future for Clover. It's just I'm releasing these stocks here because it's just, for me, it's just not fair. Given that Clover's performance, I personally was expecting to be a lot better this year. So with that, these are the performance stocks. For people that are just tuning in, just remember, I went ahead and released these stocks on January 2nd. You can see here, they're all zeroed out. January 2nd, it was released, 258, 600, 133, 133. They're all zeroed out. And then if you go down here, you can see that they've all increased except 3 of them. But overall, up 14% versus the market, which is 800%. So that's there. So this is FI. FI is going up with the revenue, gross margins increasing, earnings per share. So you can see a pattern here, right? A little bit dilution, right? But look at the free cash flow, right? These are all amazing, okay? Again, HCA, 36 billion to 64 billion over 10 years. Gross margins had some modest improvement. Net income's going up. Shares are actually being bought back. Book value negative, but free cash flow is positive. Okay. So Chipotle, one of my favorite stocks, is a beast. Bill Ackman goes ahead, is also a shareholder. 4 billion to 9 billion. Gross margins 27 to 26. Operating margins 17 to 15%. Earnings per share 14 to 44. Book value 64 to 111. Free cash flow 429 to 1.2 billion. And you could see it's going up. Okay. Now CPRT is another one. It did 17%, not bad, right? Again, 1 billion to 4 billion in terms of revenue. Look at net income. Look at that beautiful increase. Graph this increase in your head, right? From 2014 to 2024, right? Or did trailing 12, the TTM. Shares, bought back shares, free cash flow, increasing how you want it to increase. FTNT, 700 to 5.3 billion. Shares decreased in terms of being bought back. Free cash flow is increasing. MSCI Revenue increasing to 2.5 billion. Gross margins, look at that, 82%. Income, 284 to 1.1 billion, right? Free cash flow, 255 to 1.1 billion. So you can see how fundamentals work. Now, again, they give you modest growth. Some you might get some aberrations where, for example, QLYS, FIX gave you 53%. So that's going to be, let's go to FIX, 1.4 billion to 5.2 billion, 9% gross margins. Net income, 23 to 323. Free cash. Look at that free cash flow jump. That's why it was able to. The free cash flow increased by 100%. That's why it was able to pop off like that. Okay. Looking at Bro, 1.5 billion to 4.2 billion gross margins. But whenever you see them like this, it's usually incorrect. So disregard that. Book value is increasing. Free cash flow, $1 billion, right? QLYS, 134 million to 554. 80% with gross margins. Earnings per share is $4, and book value is increasing along with free cash flow going from 27 to 236 million. DSGX, again, 171 million to 573. Gross margins really well. Earnings per share is increasing. Net income is going up. Are you guys seeing the pattern here? Free cash flow is going up. This is basically, what you want to look for companies, right? But again, you need to do extra due diligence in terms of all the checkpoints that we do. That's why these stocks are outperforming the whole S&P 500. 2.3 billion to 6.4. Gross margin stayed constant. 28 to 171 million dollar increase for net income. Book value went down, but look at free cash flow, still stabilizing. And this is NSP. If you look at NSP, you can see it's down 11%. So you can see how this wasn't that impressive, right? The fundamentals of this, right? But overall, a lot of insiders are trickling in, and a lot of institutional investors. So this was on our radar, and it popped off when I was doing my due diligence. This is Wingstop, my favorite stock, 12 billion to 33 billion. 82% gross margins, guys, for freaking wings. Net income, 17 billion. Book value, 21 bucks. Free cash flow, 19 billion. Working capital, 10 billion. I mean, you can't find another good stock here. Wingstop is up 46% since we called it out at $250. Now it's $365. Again, for folks that just can't visualize this, go to year to date. You can see it here. We called it out on the 2nd, which is right here. And it's gone up 44%, right? All right, let's go ahead and let's go back here. Visa. Everyone knows Visa, right? 12 billion to 33 billion, 82% net income going up. Visa got hit hard. Now it's rebounding 7%. They were scared about being disrupted. Again, it's one of those, incumbents. Look at free cash flow. This thing's a moneymaker. Okay. So there's the 14 stocks. I'm going to go in and answer some questions here, right? About Clover. I wanted to release this. This is part of our paid subscription plan from our Mastering Stock Market course and our Stock Terminal members access. We have other stock picks on there, but I just wanted to release our portfolio hedging modeling system just to give you some ideas, just to show you other stocks out there that are really damn good and that already have a proven track record and a proven business model that are not negative free cash flow. Again, within the Mastering course, there's a lot of sections of what we look at. There's negative free cash flow, the positive valuation of companies, positive net income, negative free cash flow, positive free cash flow, negative net income, and then positive net income and positive free cash flow. And a lot of these companies are in that sector, okay, which is why they've done really well. And so this is pretty good, right? So now let's go ahead and let's talk about Clover Health. So yeah, I'm not excited with the performance of Clover Health this year, but the thing is there's a lot of changes happening right now with CMS. We're in a transition period. Watch my video with Enphase. I've already talked about the situation, and I feel like repeating it to make people feel better is not my job. What I like to do is talk about the fundamentals, and the fundamentals for Clover Health are getting better. They decreased and cut off their cash burning side of the business, the ACO. They're about to become EBITDA profitable this year, which is in competition with Alignment Healthcare. And I don't think they're going to be free cash flow positive this year. I'm hoping they decrease their SG&A, and they need to figure out which employees to cut that, but ultimately won't affect the business and end up increasing medical costs. But there's a lot of things that need to happen, and the overall 3-star rating for 2025. Lots of stuff need to happen right now. There's like a ceiling effect for Clover at 2025. What I'm hoping for is their earnings come out above expectation, and they continue to see their medical cost ratios in line with industry leading elements, which is going to be offset by Humana's and United Healthcare's, which has gone a lot. Again, I'm nibbling at these prices. I'm buying. Whoever says that you should sell right now, then I don't know who you're talking to. I didn't read all the comments. Okay, well, what's going on here, right? So this stock is about to explode. I agree. CLOV is the asteroid of the dinosaurs. Okay, will they do splits? So I see you're responding to the other person. Okay, will they do split? So here's the thing. If Clover has 180 days to figure this out, and then they can go ahead and do an extension. Again, any reverse stock splits, I recommend Micro Badger from Reddit. He did a wonderful write-up there, right? And we did a video if they reverse split and let's say if they dilute by 100%. So we already made a video about that. You should watch it, right? Somewhere in between, possibly, maybe, exactly, right? Yeah, that's what it looks like. I'm afraid after the split. Mm-hmm. So again, it's about the fundamentals. I got a comment that I was laughing at. Someone said it's not about the fundamentals anymore. Shorts are control. Shorts are in control. And that's one of the reasons why I released this portfolio hedging modeling system, because I wanted to share with you, yes, the fundamentals do matter. The fundamentals absolutely, absolutely, absolutely do matter. So let's, actually take some time right now, and let's go ahead and actually respectfully do an analysis and look at Clover's sheet, so we can kind of all go on the same page. I went ahead and went through 14 companies, and I gave you patterns of what I'm seeing. Okay. So now let's go ahead and let's give you the pattern here. One moment. Let me just open up a little tab here so we can just kind of plop it here. Okay, this is Clover Health. Okay, again, this is great to see. 291, 462, 673, 1.4 billion, and then they just shot up and they grew. But the problem is they became cash burning, and then they started dropping their revenue. Okay, gross margins 0.7, 1.2, 14, negative 12, 3, 13. This is good to see. 13% gross margins. They're getting better. But again, it's a low gross margin business. They need to find a way to increase their gross margins, whether that's a SaaS, et cetera, et cetera. Operating income, negative 187, negative 183, negative 93. That's really good. Negative 637, not good. Negative 372. Okay. Negative 200. All right. Kind of better. Okay. Look at net income, negative 200, negative 364, negative 136. Okay. That's when they became public. Okay. Negative 588. Terrible. Negative 340. Negative 213. Okay. Kind of getting there. Okay. Earnings per share. Negative 4.8, not good. Negative 4, not good. Negative 1.4, okay. Negative 0.142. 0.71 negative. Okay. 0.44 negative. All right. We're getting there. All right. Share count, dilution, right? Book value, negative 11 to sits here 0.59. So, but again, 1.3, 1.75, 1.59. Now, Alignment Healthcare is at so I recommend going to our platform. I just don't have the time. We have a platform. So we created this platform to help people with fundamentals. So we have a platform for that. I'm not going to be able to do like stock picks. That's not my job, right? I gave you an opportunity to have that at the most cheapest cost you can find in Wall Street, because we have our own data centers, and we have our own data that we get. So, all right. So, what am I? So 59 cents. Now, here's the thing. So if you look at Alignment Healthcare, I think their book value for for their book value. I think 89 cents, but their stock is trading at $4, so they're trading like 5 times book value. Or sorry, yeah, 5 times book value versus Clover's trading right near its book value. So it's interesting how that plays out. Once Clover fixes themselves, and we should expect a 5 times that of book value. Book value right now is 59 cents. If we do that, we should expect a stock price at around $2.95 in equivalence to Alignment Healthcare. It's just Clover needs to fix themselves to get to that position. All right. And let's say, for example, Clover, let's say, because, Alignment Healthcare has more members. Let's say, fine, they have 159,000 members. Industry leading MCR from the Clover side is a positive for them. Okay. Half of those members, fine. Instead of 5x, 2.5. Okay. 2.5 times 59 cents of the book value. Clover should be trading at $1.47, right? Based off of the evaluations of right now, which is terrible for stocks, especially given Alignment Healthcare. I mean, look at everything. Just look at that. It's down 44%, right? So this is not exclusive to Clover. And whoever makes you think that is a retard. Whoever makes you think that just wants to be a troll and cause issues, right? This is a wonderful time to actually buy. Like, it's a great time to buy Alignment. It's a great time to buy Clover. This is a great time, right? The only reason why I'm releasing the portfolio hedging modeling system is because, like I was expecting myself, we should be a little better than this, right? So, United Healthcare and Humana is getting disrupted, but the sad part is it's hurting Clover too, and the market's trying to figure out. The market removed themselves from healthcare. Essentially, they took 150 billion out of the healthcare, and it's honestly hurting Clover. And Clover just needs time to prove to prove itself. So, out of good faith, I wanted to release these for you guys to show you, what does a mature, good company look like, right? All right, because Tesla. I give examples with Tesla. All these Palantir's exiting the positive free cash. They just recently became free cash flow positive. So these are all new companies. I wanted to give you kind of ones that have been around. Okay. But now let's go ahead and continue with Clover here. So yeah, so look at free cash flow, right? Negative 160, negative 19, 283 negative, 291 negative. Not good. Now negative 116. We want to see that negative to positive. Okay. Now, why am I confident? Right? Why am I confident? Well, I'm confident because their MCR is now at a profitable range. I'm confident because they removed their cash burning business. I'm confident now that they're able to predict their business line now. Let me take a sip of the coffee here. They're able to predict the their star ratings now, meaning that they have a potential path forward to 4 stars. I don't know if they're able to jump to 4 stars, but if they do, that'll be freaking badass. But they might go back to 3.5 stars and then a path forward to 4 stars. But it would be nice if they can jump to 4 stars, because then the evaluation metrics change. Okay. So that's where it's at. And yeah, I mean, that's pretty much where we're at right now. We're at a standpoint gross margins. I mean, Scott's done his good job right now by increasing gross margins from, negative to 3% to like 13%. This is great. It's just right now, Clover needs to go ahead and stop burning their cash. And then most importantly, operational expenses need to go down, and then SG&A needs to go down, right? So that's what we have here, okay? And yeah, I hope you like this video. Definitely lots of people are going to get scared because of this. I'm getting a lot of comments saying, "Oh, you're saying Clover's going to go to 40 cents." That's not what I'm saying. I'm saying that and again, people are getting emotional, and they're emotional investors, and I can't help those people, right? It's not like don't be in the market, right? Go read chapter 8 of The Intelligent Investor, and go read and print that pamphlet and print that contract so you can read it and put it under your pillow. I mean, I don't know what to tell you, but I'm saying that if the stock does go down further, there's going to be a lot of people that are going to freak out. Let me see if I can find I like Public because they usually kind of show a little bit of the sentiment of people selling. But surprisingly, people are investing. I mean, holy shit, people are investing in Clover right now. So, I mean, I don't see any recent. I want to see some selling. I don't I'm looking at everything here, and I think the people that are in Clover now are buying, right? I mean, usually I would see some selling here, but because uh, but it's all. I mean, you would see some red here, but it doesn't seem like it. And this goes back to November, so yeah, it seems to me that whoever's in Clover now understands it, and I think right now what's making Clover going down is pretty much the algorithms, the training algorithms. Because whenever you have stuff like this go down, um, like when you have like the last time we saw like this was back in 2020. The last time Humana was this low was uh around April 2020, like right at the heart of the pandemic, guys, right at the heart of the goddamn pandemic, right? So that's pretty, and then they started printing money here, the printing of money. So I think you know everyone's feeling the heat for Humana, and I think all the algorithms are just removing healthcare stocks. Even at like Citadel, they're all basically removing themselves from even Clover. Renaissance is doubling down. We're going to see if Renaissance leaves, but Renaissance seems to be doubling down on this. And again, they've looked at the numbers as well. They're not idiots. So we'll see what happens with them. But there could be early tax loss harvesting, because it's very predictable to note that Clover is going to be around these prices for quite some time, because they need to fix their free cash flow problem and their their SG&A problem. So yeah, so that's all I have to say, guys. And the thing is, repeating the same thing over and over and over again to make you feel better. Yeah, that's not my job, right? My recommendation is if you're not comfortable, you should have never invested in this company. This is a long-term hold. And sometimes stocks get their intrinsic value calculation within 2 to 3 years. But sometimes, they get it within 5 years and 10 years. It takes time. Look at Enphase. It took since 2012, 2013. It took literally, 8 years, 8 years for Enphase to play out, right? So this takes time, guys. You know what I mean? It takes time, right? And patience is key. And I'm gonna be doubling down at these prices. These prices are so damn cheap. I mean, this is like cheap. This is like, it's not even the 99-cent store anymore. This is like 67-cent store. I mean, come on. This is like ridiculously cheap. Like, what about inflation? This is so cheap, right? You're getting access. You're buying this company at asset value now. You're literally buying it at asset value. You're buying it at asset value, which is insane. Okay. So I'm very excited. Whoever tells you, oh, Al's gone bearish. No. I'm with some good faith. I'm releasing this because it's not fair. This is the stock's not doing well, and I'm releasing this out of good faith. And also as an education factor, just to show you, maybe if you guys have access to Yahoo Finance for free, just look, see why are these companies doing so well this year, right? You might learn a pattern or two. Okay. But let's see here. Let's see how big of an impact Quartet would bring the Clover. Yeah, I think it is going to be a good impact. I'm thinking, hopefully they release another revenue stream like SaaS, which hopefully will increase its gross margins. But overall, that's pretty much what I have with Clover. I mean, it's going to be a long-term hold, and this whole inflation thing and the interest rate, we're going to see. A lot of my institutional data points are suggesting that no, we are going to get a rate cut this year. And even if we don't, we're going to be fine. The probability of a rate hike is low. And all we need to see is a PCE do a lot better than the CPI. And then people can just back off and say, okay, Wall Street's going to go ahead and be happy again. But regardless of what macro environment we're in, it's all about Clover Health's fundamentals. And we already have starting to see them partner up with Quartet. The possibility of Quartet using their Clover Assistant for all patient encounters, even extending beyond the Clover Health insurance that supports their patients, to around 80,000 members. We are basically starting to see now that even the Blue Cross Blue Shield specific sector CFO of Medicare Advantage even commented on Andrew Toy's post about how this industry-leading MCR is too good to be true. Then he removed it. We went ahead and took a screenshot of it. There's a lot of data points to suggest that we are entering a disruptive phase, and to believe that Clover is not going to get hit when money's being pulled out of healthcare is foolish, right? This is bound to happen. And the probability of a reverse stock split, yeah, we'll see. I mean, if it stays like this for another 880 days and then beyond, yeah, of course, right? But does it ultimately change the fundamentals? No. If they're going to end up becoming profitable 4 stars, it doesn't, right? And then time will tell. Time will tell. For people that are wondering kind of what I'm doing in the meantime, well, I'm working on my career, right? I'm having the money work for me without having to micromanage the money, because that's the beautiful part about investing, right? You have your money work for you, right? People that are hyper focused, I'll give you an example, right? Pretend, let's say you only had $5 in Clover, and let's say it dropped down to $1. Would you care? Not really, right? It depends. If you ask maybe a high school student who only has $40, then yeah, that $5 dropping, I thought that's a lot of money for them, right? So you kind of have to ask yourself sometimes and check your feelings and emotions. Why am I so emotional about this drop? Maybe because you have too much of your life into it, right? So that's something you have to ask yourself, right? About maybe risk management and being able to diversify one's portfolio, right? So that's a very important. You don't want to put all your eggs in one basket, right? Because then you start getting very scared when it drops, because your eggs are all in there, and then let's say if it does go bad, then you're financially ruined, right? So again, I broke my rules of no more than 10%. I got 30% into this, which is again quite a lot, but again, I do believe there's a future, right? And I'm very bullish. And again, $332 million market cap, that's ridiculous, right? So yeah, that's all I have for you guys. Hopefully this was helpful, and hope you guys enjoy the stock picks. And yeah, let me know what you guys find about them. And we will go ahead and review how they do at the end of the year, since we released them publicly. As of right now, when we first released them, they were up 0%. If you go down here, if we go here, when I first released them on January 2nd, we were up 0% because I just released them. So 0%. But if you go ahead and go down right now, if you go down, we are up 14%, right? If you go ahead and average, 7, 3, 13, 17, 32, 17, 15, negative 5, 15, 46, 53. If you average all those, you get 14%. And if you go ahead and go to the S&P 500 and you go to year to date, it's only up 8.08%. So we're outperforming the S&P 500, right? So that's pretty much what I have to say. I hope this was very helpful. Wonderful, wonderful. I was waiting to buy CLOV almost 2 years. Finally bought around 2,000 shares. Keep up at least 5. Yeah, exactly. Long-term hold, right? So very excited for the future of Clover Health. And I definitely, these are really cheap prices. And I think right now, the other worry I have, though, is the chief scientific officer, right? I want to see what's going on with that, right? So, but overall, they just got a new CFO from the Medicare Advantage side, which is their number one money-making side. They're essentially industry-leading MCR side, from someone who has experiences from the growth strategies of Humana and who was on leadership of Humana for a couple of years. So I'm very excited to see that play out. And all this takes time. This is a long-term hold. And I'm going to be here every step of the way. And I won't bat an eye if I have to hold for 10 years. Again, I'm not retiring in the next 10 years from now. I'm probably going to retire maybe in 30, 35 years, right? So this is a long-term, this is a very long-term hold for me, right? I'm not saying this is going to be United Healthcare. I don't think it will. United Healthcare is a behemoth, but look at United Healthcare, 12 pennies in 1884. I'm willing to hold for 30 years. What's 84 plus 30? That's, 84 plus 30? No, what am I saying? Let's 2024 minus 30. That's 1984. Like literally 40 years, probably not that long. So we'll go 2010. 2010, it went up. And you could see, even after 30 years, it only went up 23,000%. That's a lot. But 23,000% compared to 274,000%, or at its peak, 341,000%. That's a lot. That is, so to give you perspective, 341,000 divided by 100, that is 3,400 extra money That means if you put $1,000 in times 3,400, you would make $3.4 million. So $1,000 turns into $3.4 million. And you get what I'm saying here, guys? So I think 100,000 would turn into what? 334 million, right? So anywho, yeah, I think that's potentially maybe the inclination, because I think Clover now is a mature company, and I think we're good to go. So it's maturing, and I'm very excited, and I'm definitely, now these you can't these prices, I'm going to be very clear. You cannot avoid these prices. These prices are cheap. An insider bought at 70 cents, and now 72 cents, and now we're at 67 cents, right? Like this is insane, right? I am as we speak right now, I am making some maneuvers right now, and I'm considering. I don't know if it's a good idea, but I'm considering of increasing my percent ownership and selling some of these other stocks here, which is why I'm releasing. You know what I'm saying? I'm considering selling some of my holdings here, especially the ones that have done really well, like Wingstop and Chipotle, because I think this is. I mean, I don't think they're going to make any more. I mean, they might go to 50 or 60%. They might make a lot, but this is a lot, guys. This is 53% increase on your money. And I think I might just go ahead and take that and put it in the other one. So I think that's going to be the plan here. Just trying to maneuver it. So with that said, just to give you guys one last bit of information here. Let me just open up a. So here is the intrinsic value calculation. So here's an intrinsic value calculation. But let's go ahead and move on over to this, because I never did a linear analysis with you guys, assuming a 100% dilution, right? So if we go to linear analysis here and we type in Clove's numbers, and assuming Clover will never, ever, ever grow more than 15%, that 15% is like a low base number. Imagine them diluting, because we've known that they've grown over 100% before. They have growth in them. They know how to grow, right? But let's assume they will never grow. And let's say the max they will grow is 15%. And let's say right now they're around 500 million shares, right? But now let's do 1,000. Let's do 1 billion shares. Let's say they just dilute the shit out of us, okay? And let's go ahead and let's put them at a price to sales ratio of 2.5. 2.5 is average of Alignment Healthcare and Clover when it was dipping at around the average price of their second share offering. You put that in there, and in 10 years, we should expect a stock price of $15, right? This is like bear case. This is like, I believe this is with a dilution bear case. Now let's go ahead and let's assume, and let's grow them at 0.5 instead of price to sales of 2.5. Then we start seeing this, right? We start seeing 77% bull, 46% bear. And I think that's what the market is doing right now. The market is looking at Clover, and it says, I think Clover is going to reverse stock split, and Clover is going to do a 100% dilution. It is going to raise $500 million in capital, and it's going to dilute shareholders to where there's going to be 1 billion outstanding shares rather than 500 million. And they're not even going to grow that well, and they're only going to grow 15%, but we're not even going to assign them a 2.5 revenue multiple. We're going to assign them a 0.5 revenue multiple, which is equivalent to Humana, right? And even if you do this from these current share prices, you're still in 10 years going to be $3.11. So if you go ahead and do this, 311 divided by 0.77, that is 4x your money, which is why this is undervalued. And again, peak fear is happening right now. Peak fear is happening. The market's placing a lot of dilution on this. If, for example, they manage to not get diluted by 100%, then you can see that even with a low ball, imagine if they don't dilute, and even with a low ball 0.5% revenue multiple, we're still going to essentially 4 to 6x. Okay. and let's say they don't dilute, and then they have a 2.5% multiple, and there's a 15% growth rate, then you could see anywhere between $31. But the market's not evaluating it at that right now. But imagine if they didn't dilute, and if they still grow a modest 15%. Now, what happens if they grow 35%? Okay, then this is when things change. This is when things change. And if you don't believe if you don't believe a 80-cent stock can go to $150, then go ahead and go look at Enphase, and you tell me how an 80-cent stock, if I can find it here, 2017, 72-cent stock actually went up to $300. Okay, so yes, it does happen. Okay, it does, right? But again, right now, that's not where we're at, right? And I want to be like, okay, they're going to grow 15% for the next 10 years. Let's dilute them over 1,000%, and let's do an average 2.5%, right? So 2.5x. And this is what I see. Okay. Worst case scenario, worst case scenario, they will forever be evaluated as an insurance company. All right, this is it for them. Okay. Hey, you know what? This is below my average share price. Whoever has it above this, I'm sorry, you've been having the opportunity of life to average down. So regardless, I'm confident that I'm going to be making money on this play, right? Unless something crazy comes out, they get lawsuits after lawsuits, which is one of the risk factors that the incumbents can do. But I think they have that marked down, right? So I think this is what I'm seeing, right? And again, the market is evaluating it at a 0.5 price to sales. That means for every dollar they make, the market only adds 50 cents to their market cap. The growth rate's 15% on average. Technically, they're growing less than that. And this is with a share dilution of 500 outstanding shares. Like this, the price, I'm just giving an example, guys. The prices in which we are seeing now is Clover being diluted at 500 million effing shares with 1 billion shares outstanding. Again, these numbers are in millions, right? So, and again, even like you could see it, even with all this stock going down, you look at the numbers and you look at the ultimate play here, right? They have no debt. AMC has debt. People are just freaking their nonsensical minds out here, and this is exactly what you want to see. So I'm hoping this thing drops to 20 cents, 10 cents. I'm hoping it drops even more because now I'm maneuvering stuff around now, and I'm like, I'm going to buy more. Screw the stock price. Look at the fundamentals. The fundamentals are improving. If you liked Clover Health when it was here, when it was a negative 12% gross margins, and how the frick can you not like it when they have a 100% improvement in their gross margins, right? Or when they reduce their MCR from 103% down to 80%. That's more than a 2,000 basis point decrease. Okay, so anywho, there's going to be people that understand. There's going to be people that don't, right? And out of good faith, though, even though I still do believe this is one of the best plays in the market right now, out of good faith, we went ahead and released our portfolio hedging modeling system, and we hope that this, just gives you some, some ideas and to learn about, what constitutes a good company. These stocks are outperforming the market. So that's all I have for you guys. Hopefully this was helpful. SAS is okay, good. Someone says SAS is a multiple of 6. Now, if they do become SAS, which we know is possible, because why the hell did they not hire they just hired a VP of SAS? So we know it's possible. So if they do have a 6, so let's go ahead and bring them down to 500. And if it's a 6, okay, look at it now. 11 to 18 so let's have them grow at 0%. Let's say CLOV will never grow. CLOV will just, right? As a SAS, $11 to $18. Go ahead and dilute them by 100%, $5 to $9. Go ahead and grow them at 15%, $9 to $37. Go ahead and grow them at 35%, $9 to $185. And if you don't believe this is possible, look at Humana. Look at United Healthcare. Look at these stocks that were trading in the pennies. This is a long-term play, okay? If you want short-term money, get out. I mean, listen, guys, listen. I'll give you an example. Okay. And I don't like to use this example because I don't like to think of medicine this way. I just don't know the numbers of engineers. I don't know how much money engineers make and software engineers. I don't know the numbers. I only know the numbers in healthcare because I do research and people post numbers about how much doctors make. I'll give you an example. And I think doctor is a good example actually because it's the hardest field. Okay. So let's look at top 1% of income. Okay. I hate doing this because it's not humble. But I'm just trying to give you an example. Okay. Top 1% of income in USA. Okay. Top 1% of income, and people don't believe this. It's crazy, right? Top percent of income is actually 380,000. Well, this is 2008, guys. Hold on. Let me see if I can get. It's around that. It's around that price. Let me just if I can get you a better data here. Hold on. Let me just get you better data. Get you better data here. I'm not going to reference 2008 when there's freaking inflation going on right now. Hold on. Hold on. Okay, this is good. Top 1 percentile. This is good. Okay. We might do this one. Hold on. Let me give you a moment here. This is a good one. 2021. This one has more data, so we'll go with this one. Let me just make sure we get this one. Okay, that's good. That's good. Okay. All right. The average wages in the United States is $61,000. Again, this is 2022. It's a year old, but it's a plus or minus 2,000, right? Plus or minus 5%, right? Right? With the inflation, right? 3%, right? With inflation. Okay. So at 3.5% to be specific. Okay. So average wage of the bottom 90% is 40,000. Average wage of the 99 percentile, 183. Average wages of the top one percentile, 785,000. Okay. So let me give you an example. Okay. If you want to be in the top 1%, right? And I only know these numbers because I did research on gender disparities and I'm going to be publishing that paper. It's disgusting. Women make 70 cents on the dollar in neurosurgery, but on average, a neurosurgeon makes anywhere between around 600, 700,000 all the way up to $3-4 million. It depends what you do. But that's the average of a neurosurgeon, right? Right. Sometimes people have startings of 850 to 900,000. For me, I'm interested more in stereotactic neurosurgery. So we tend to be academically bound. So the numbers are a little off from there, but regardless, it's still the top 1%. Okay. So what do you need to do? What do you need to do to get this top 1%, right? Again, the money doesn't matter. Screw the money. The money's nothing. Look at Steve Jobs on his dying deathbed, and he has all the money in the world. Money doesn't mean anything. Okay. Money is the root of all evil, in my humblest opinion. Okay. So anywho, top 1%. What do you need to do? Okay. You need to do 4 years of high school. Okay. Let's say everyone does that. Some people don't, but let's say everyone does that. Okay. Let's remove the 4 years of high school. Let's start from college. You need to do 4 years of college. Okay. Making nothing. Okay. Actually some people getting in debt. Then you need to do 4 years of medical school. Okay. And then some people are doing a year to 2 year research year. So that's another 2 years, let's say. Let's add that. So 4 and 4 and plus 2. So that's 10 years making nothing. Then you need to do 7 years of residency for becoming a brain surgeon. 7 years of making around 60,000 and working 120 hours, working below minimum wage. So add that 7 years, that's 17 years, and then a 1 to 2 year fellowship. So 19 years to be in the top 1%. In my humblest opinion, and you motherfuckers out here are complaining because the stock hasn't basically achieved its intrinsic value over 2 years. Get the hell out of here, guys. Get the hell out of here. Are you serious? Nothing in life comes easy, okay? Nothing in life comes easy. If you want to be in the top 1%, it's going to take time. Just like how Clover wants to be in the top 1%. It's going to take time. And guess what? A lot of people that are in it for the money, they looked at this and they're like, "Whoa, what jobs?" I'm let's see. Hold on. Let's see. What jobs give you this top 1 percentile? Okay, let's see. I don't even know if a medical doctor. Oh, okay, let's look at that. And all these people, they do it for the money, and then guess what? By the time they're pre-meds, they realize how hard it is. They quit. They quit. They quit. They quit. They quit. Okay. Life is tough. Okay. Stocks, it's a business. Stocks is a piece of a business. It takes time. Okay. Now, I hate using medicine as as an example. I just know the numbers of what doctors make, and that's just I can't give you engineering numbers. I don't know what sometimes I hear engineers make 300,000, 400,000. I don't know the average engineering salary, but I'm telling you right now, if you want to make it in the top 1%, it, at least for neurosurgery, it takes 17 years. Now, hold on. I know some neurosurgeons that are making around this, and they're in the top 0.1%, not 1%, top 0.1%. And you know how many years have they been practicing? They've been practicing for 20 freaking years. Okay. 20 years plus 17 plus 19 years. Hold on. They've been practicing for 39 years. 39 years to get this. 40 years, right? Which is on average of kind of United Healthcare from 14 cents to where it is now. So anything in life takes time. Okay. Anything in life, right? Nothing comes easy. So that's what it is. And someone like me and maybe a lot of other doctors that are holding, they know this, and they know that this takes time, and they know that things take time to play out. Okay. And yes, sometimes stocks go up and a lot and everything, but like there's sometimes a reason for that as well. But overall, this thing takes time, and it's very hard because like I'm trying to talk to people in this category and trying to explain to them the thought process of this category in terms of intrinsic value calculation and whatnot. And again, these are different. I hate to say this, but people that start from zero and they go up the ladder here, not people that inherit this, because people that inherit this, sometimes you might be wealthy, but your mindset is that of average. There are different levels of mindsets that come with these different types of money, right? The people up here have historically, statistically, know how to manage their money better than the people down here, right? People up here have a higher probability of learning, in terms of financial literacy and knowing, investments and economics more than people down here, right? It's just, statistically, if you go out there, people that are in the average 1% of earners, you go ahead and talk to them about intrinsic value and stock market. I would say maybe 20 to 30% of them might know who Benjamin Graham is, intelligent investor versus the people down here. Okay. I'm not saying, but here's, if you were to ask me who's better, the people up here or the people down here, of course I would say that. No, I'm joking. No, of course that's a joke. No, we're all the same. We're all going to go on the ground the same way. And sometimes the people down here think that buying nice things and wearing designer makes you better than the people in your category down here. Right. No, that's wrong. Right. Just because you can afford fancy things doesn't make you better. Okay. But I hope that this, because again, guys, listen, I don't know how to explain this to you. This is like more behavioral economics, right? This is it's again, I have a neuroscience major. I really love how economics plays into how people think and how people, how economic conditions can basically alter the way people like act. It's a very intriguing process, and it's really beautiful because there is an equation, and it's just so weird how things work. You can statistically map out when a society will go into chaos by having sets of equilibrium factors that have disengaged, which the CIA uses to infiltrate a government. They cause different type of sanctions to happen to hopefully cause countries to riot and to replace their leaders. And it's all behavioral economics. It's really beautiful. But again, the point that I'm trying to tell you is you guys are trying to become millionaires, but the problem is you don't understand that becoming a millionaire takes time. It doesn't happen overnight. It takes time. And if it does happen overnight or it does happen in the short term, then you either gambled in the casino or you gambled with a Powerball or you got lucky on picking a stock. And if you continue on that path, you'll end up losing that money. Okay. In the end. All right. So stuff like this takes time. Okay. All right. So let me see here. More insiders buying at 40 cents. This is typically Tesla play. Exactly. Yeah, Tesla did the same thing, and it absolutely did. This should be just one of your investments, so you're not riding. That's what I'm saying. A lot of these people, and I don't know this. I don't know their portfolio, right? I haven't seen it, but a lot of these people, their whole portfolios, I hope not, is probably in this stock, and that's why they get angry at Andrew Toy and lash out. It's in their ability to diversify, and they just put all their eggs in one basket, and then they'll learn. They'll end up learning, right? But again, I'm waiting to stuff like this takes time. Again, take it from someone who's climbing up the ladder. Take it from someone who's climbing up the ladder, who literally went, actually, if you look at average wages, I was below here. I was actually down here. And I'm not even on here. I couldn't even afford to be on this screen. I was actually homeless on the freaking street. Okay. Take it from someone who went from nothing. Okay. And who's climbing up the ladder of what capitalism in this country of a facade says what defines success. The only reason why you get paid like this is because you're doing great things. But even let's say if neurosurgery offered the salary, I would still do it because the job is amazing, right? And I hope that if I ask doctors that I'm friends with, they would say the same thing, right? But again, there is a pattern here, right? If everybody could do it, why would it be top 1 percentile? Why would it be top 1%? If everybody can make this money, why isn't everyone doing it? Because it takes 17. I don't know. Again, I don't know the numbers for software engineers. I know there's like different levels of software engineers, or C levels, 2 level. I don't know those people, right? I don't know how they get paid. But I'm from medicine's easier to get mapped out. Medicine's more linear, and they have everyone, all PGY 1s and 2s and 3s make the same, so it's easier to give this example. But it takes approximately 17 to 19 years to make this money, right? You know what I mean? So just to give you some understanding, investments take time. And that's all I have to say, guys. If you guys don't understand that, you know what I mean? Then, and I wrote books about this too. I Intelligent Investor for the Modern Reader, revised for the, Modern Reader here, How to Find a 10 Bagger. I tried my best to educate the community, but, again, some people are going to understand, some people don't. And, again, for me, I would hate myself if I went up this ladder and here I am in this beautiful ladder and not basically create an avenue for people to climb up the ladder by learning about the stock market, which is why I created this channel. I don't have to basically do this. This is not a requirement for me to become a brain surgeon. This is not a requirement for me to be in the top 1%, right? I don't need to do this, right? But I'm doing this because it's not fair, because there's a mentality shift that you must have that'll change. You have to change how you are wired as a human, because when stocks go down, it activates the sympathetic nervous system and activates fight or flight, which causes people to panic and people to get scared. Trust me, I feel it too. You think I feel it too, but I've trained myself to be like, because I have experience, I've trained myself, like I'll give you an example, like if you go to a trauma surgeon and then you have like 4, 5, 10, 20, 30 people that are mass casualty with bullets and their limbs are hanging off, a trauma surgeon is going to look at it and it knows exactly what to do. It's freaking badass. They'll know exactly. They'll label them as they'll save about all their lives if they're salvageable, right? Because it's experience, versus if you take someone like me who's just a medical student and you put me in that situation, I'm gonna piss my pants and I'm gonna start shaking. Okay, I'm gonna be honest with you. Okay, so I'm probably gonna be a little better, but I'm probably gonna piss my pants and I'm gonna shake, right? But it's because it's experience, and I understand some people just don't have the experience when a stock goes like this, right? Imagine the people that sold Amazon when the stock dropped 90%, guys. Holy shit, what are they gonna do? Imagine, oh god damn, guys, holy shit, right? So I understand. I'm not faulting you. I understand. But for me, I'm living my life. I'm working on publications. I'm working on bettering the future of neurosurgery. I'm working on what makes me happy, right? Which is like my job, right? But I'm going to be a future physician. I'm going to hold patients' hand in times of crisis. I'm going to be there for patients. Hopefully you have something like that. I think being a doctor is the best job out there, because I know, like, it's hard, but like, you're there when people's times are of crisis, right? So so try to find passion like that to keep you kind of fixed. I'll give you an example. One more. If you cut the head of a chicken, what is the chicken going to do? The chicken's going to run around. Okay, chicken's going to run around crazy. Why? Because the brain is inhibitory. The brain composes a lot of GABA. Majority of the brain signals are actually inhibitory. So as a human being, a person who can inhibit their responses is actually a sophisticated human being, right? If you cut off the head of a chicken, there is no brain anymore. The body just starts running before it collapses because the brain inhibits things. Sometimes you need to educate your brain to when you see fear, you need to quiet down and think things through. Right? So I hope this was helpful. I hate to see people, get hurt, and I hate to see people, upset, and just, but it is part of the game. It is this Wall Street, right? Which is why I released our portfolio hedge. Hopefully, keep you occupied and to look at kind of these patterns, and you might like some of these companies. Okay. Other than that, guys, this is between you and your portfolio. You guys are the CEO of your portfolio. You guys are responsible. You're the captain of your ship. Okay. So, and if you fail, you're the captain. Okay. So hopefully this was helpful. This was a long ass live, but I wanted to really, really kind of hit this on the knob here. We're approaching peak fear, especially with business tricks. For people that understand that, they understand. And I just I've been through this many times, so it's fine. But I've never been through it in a. I'm going to be honest with you guys. I've never been in a position where I have people I talk to on YouTube. I've never done it publicly like this before. So that's kind of different. So it's easy to control your own emotions, but to see other people freak out, it's like, you kind of freak out too. Like, oh my God, so kind of how I've been kind of seeing things. Hey man, I appreciate it. Appreciate all of you guys. Shit, I can't pass this opportunity. GN knows what's up. This like Tesla Enflays. If you buy now, you'll be 50. Exactly. This is a long-term hold, guys. If they're able to fix this and grow, holy shit, right? It just takes time, right? And now, let's say fast forward 10 years from now, doctors are going to be they're going to be envying us. They're going to be like, you mother effers, all you have to do is hold, and here I am working all this, right? You're going to have those types of folks too. But again, this is why I created this channel to help people, right? So, so hopefully this was helpful. Lots of talking, tired as hell, but I hope this helps somebody. I hope this kind of give you guys some perspective. Okay. Yeah, I know, and that's the thing. Like if let's say if the stock does go bankrupt, okay, all right, failed business. All right, next. At least for me, it doesn't. I'm not in financial ruin, right? But for some people, yeah, and maybe this might be a learning lesson, right? I'm not saying I don't think it's going to go bankrupt, right? There's no way. $1 billion in revenue. Now hold on. If let's say Clover goes from 80,000 members to 30,000 members in like a year, I'm going to say, oh shit. I'm going to be like, oh crap. Okay. Unless they activated their SaaS and then they're making money in SaaS, then okay. All right. That's fine. But if they go from 80,000 members to 20,000 members to 5,000 members, I'm like, okay, guys, it was, that we're done, right? Game over, right? But we're not there yet. Okay. So yet, right? I appreciate you guys. And yeah, I'll see you on the next one. Have a wonderful Sunday.